Hi, thanks so much for joining in. You're watching Ask BQ on BQ Prime. My name is Alex Mathew, and like the name suggests, this show gets you answers to all of your stock related questions. So do send them in to us on any one of our social media platforms. We've also got an email running, we've got a WhatsApp number as well. So there are several modes for you to use to send your questions in. I'm most active on YouTube, so you can talk with me on the chat function on YouTube as well. Now, we've got a couple of guests joining in to give you the answers to all of your questions, both short-term as well as fundamental long-term. We've got Mr. G. Chokkalingam, who's the founder and managing director of Economics Research. And we've got Rajesh Palviya, who's the SVP Technical and Derivatives Research at Axis Securities. Gentlemen, thank you so much for taking the time and for agreeing to be with us on Ask BQ. I will start with a quick technical check. We are down for second day in a row. And in fact, Rajesh, let me come to you first on what the key levels are for the benchmark index.
Hi, thanks for having me in the show. So market is now almost trading near to 20-day moving average. If we talk about the Nifty, almost it's hovering around those levels. So 19,700 is the key level as of now to watch for the today's session. If we breaks those level, then we may see furthermore extended selling pressure in the market, and then Nifty can go further down towards 19,600 also. Even if we look at the call put concentration data also, so most of the call writers are now shifting their position on the lower strikes. So now call writers are aggressive at 20,000, 19,800, even 19,900 strikes. So these are all levels where call writers are taking their writing position. So these levels are likely to act as a supply zone for any kind of pullback if we see in the market. As we are having today's option expiry, so we expect that market is likely to remain under pressure only for today's session. 19,850, 19,900 are the key supply zone as of now. Until Nifty not crosses and close above 19,900, there won't be any short covering action we will see in the market in the near term basis. Bank Nifty also shown long unwinding setup in today's session, and most of the traders are cutting down their position and trimming down their position, as we are now trading below to the major put based concentration of 45,500. So that level is likely to act as a supply zone if we get any kind of pullback on the higher side. Right. So 45,500 is the key level to watch for on the Bank Nifty, and we expect that further more pressure is likely to be there towards 44,800 for the Bank Nifty also.
Fantastic. Thanks so much for that setup. Let's quickly jump into what I would like to call Ask BQ Focus. And today the focus is on IT companies, and some of them have in fact done pretty well for themselves, I would say, over the last 1 month or so. The likes of Infosys has gained about 7% or thereabouts. Mr. Chokkalingam, once again, thank you so much for taking the time on the show. What's your view on the IT pack as a whole? What opportunities would you say are there for investors to use right now?
I would say that there is no great opportunity to make money, but one still consider staying invested in the large IT stocks, large cap IT stocks, because I have a belief that there can be further correction in the overall market, and particularly small and mid cap, there can be a severe fall in those two segments. And the fundamentals also, external economic conditions also favorable for rupee to fall further, whether you take a trade deficit that caused by decelerating exports of goods or FII selling, even the FDI inflow, net inflow is not that robust. So, and Forex reserves also is slightly down from 600 billion mark. So, considering all that, I believe rupee can come under more pressure, and market also will be under some pressure. Of course, Sensex and Nifty will not crash, will not fall more than 3 to 5% in the short term, say next to 4 to 5 months, but small and mid cap can fall in a big way. So considering all this, one can stay invested in the large IT stocks, but however, mid cap IT selectively one should exit. They have run up phenomenally well, and surprisingly, many mid cap IT stocks are trading at a superior premium to large IT stocks, the leaders, and the leaders are quoting anywhere upward of 28 PE. Maximum up to 28 PE on current year. The mid-cap stocks are trading at upward of 27 to 40 PE. but I don't think they are going to grow much faster than the leaders in the short to medium term. So therefore, one should book profit in the mid cap IT stocks which are trading above 28 or 30p on the current year earning, but stay invested in the top 2-3 leaders.
Okay, fantastic. Let's jump into the questions, and we've got a couple already that have been sent to us on YouTube, a couple that have been sent on Twitter as well. And just a quick reminder to everybody tuning in on the various social media platforms, just send your questions in the comment section. You can send us a message on WhatsApp as well. The first question coming in is from Subramanian P on YouTube, and he's asking about PVR, and he's looking for a short-term view on the stock. Rajesh, I'll come to you on the technicals. He's saying till the next results. So how does PVR look on the charts, and what levels would you say are attractive?
So since last 2 weeks, we are seeing some profit taking is happening in the stock prices. Though stock has run up quite well in recent past, stock is still holding its important long-term, short-term moving averages. So we believe that 1680 is the important level to watch for on the downside. If that level is held by the stock in this corrective move, then possibly stock will start giving some buying interest around those level, and then we can see a pullback action. On the higher side, 1800 is the key level to watch for on the higher side. Once the stock crosses above 1800, then possibly this stock can again continue its uptrend, and then resumption of uptrend can take this stock towards a 1900 level also on the positional basis. So if you want to buy a stock at the decline, 1680 is the level where you can buy this stock. Keep your stop loss at around 1650.
We've got a long-term question as well, and this one is coming from Arjun Saluja, and he's asking about a couple of stocks. Mr. Chokkalingam, this one's for you. Ami Organic as well as Rainbow Hospitals. What is your take for a period of about 3 years, which can be constituted as a long-term view?
I looked at the valuation of these hospital and organics companies. They are definitely stretched extremely. As I mentioned earlier, I am expecting small cap to correct substantially. There is a lot of valuation bubble, and therefore you should sell these stocks. And if by any chance they fall anywhere from 10 to 20%, then you should consider both of them for long term.
Okay. We've got a question coming from Kashyap, and he's asking about two counters again. I'll first come to you, Mr. Chokkalingam, on the fundamentals. ESAB India as well as Ethos. These are the two counters that he has identified. What would you say based on the fundamentals if you have coverage?
I just want to caution the investors. I am extremely biased against the small cap. Despite the fact that for 30 years, I used to recommend 80 to 100% of my stocks from the small and mid cap space. For the first time, I am extremely nervous. I may be wrong, and I may go wrong in the short term, particularly for the traders. I do not find valuation comfort in 9 out of 10 small cap and mid cap stocks. So therefore, these two stocks also, I have looked at them. I would give sell call.
Okay, so if you're holding, you would say sell, and you would say do not make a fresh entry at least till you see a sizable correction. How much would that correction be for these two counters, though?
Yeah, that if you look back at history, after phenomenal rally, the small caps have fallen anywhere from 20 to even 40%. I am not expecting that kind of crash in the small cap like 30-40%, but then 10-15% the small cap indices can fall. That would mean overvalued stocks or the stocks in which bubbles are there, they can fall even 20 to 40%. I may go wrong because now current rally is driven by the perception, not by the fundamental. So for analysts like me to forecast when it will fall, what extent to fall, it's extremely difficult or almost impossible. But I go by fundamentals, and so they can fall even to anywhere from 10 to 20-25%. I'm not saying the entire time. Even now we have recommendations on small and mid cap, but as I said, only 5 to 10%. So I would suggest 50% of the money to be parked in Sensex and Nifty stocks or top 100 or top 200 large cap stocks, and 5 to 10% minimum cash within the equity asset class, and then 5% minimum gold ETF. Then one can put 30% with the average risk profile in small and mid cap. That too very high quality in terms of the valuation, balance sheet quality, management quality, business model. If in case they fall, then one can go back to small cap in an aggressive manner.
Okay, fantastic. All right, that answers the question. We've got so why don't I come to you, Rajesh, on these two counters in particular, and then we'll go to the other questions that we have very quickly. Do you have a recommendation based on the technical levels on ESAB India and Ethos? Is there anything on the technicals that's suggesting that there could be a fall in the near term?
See, if you talk about Ethos, it's clearly still in the uptrend, and we have seen series of higher top, higher bottom formation in the stock, and across all time frame, stock is showing bullishness. So what I'll suggest, one should trail their stop loss towards 1680, which is the important support area on the downside. That is almost coincide with 20-day moving average. So that level one needs to keep in eye, like 1680. If it breaks those level, then one should exit from their investment if you are carrying your positions from the lower side. So 1680 is the key level where we will keep our stop loss to hold long position at this moment, because overall structure is looking bullish only. So we may see furthermore extended rally in the Ethos. ESAB India is correcting since last couple of weeks. This is the fourth consecutive week where we are seeing some profit taking is happening in the.
We may just have
So if at all, if you are still holding your position, you're not good. So now your stop loss, you can keep your stop loss at around 5050 level. That level needs to keep watch on the near term basis. If it breaks below 5050, then you should exit from your long position, because that this stock may correct further from those level, and then possibly 4750, 4600 could be the next target on the downside. So keep your stop loss of 5050, and if it breaks, then book your profits.
Okay. Srinivas Konduru has got the next question, and this is on red tape. He's saying that he bought before demerger. Mr. Chokkalingam, do you have any specific coverage on this, and would you be able to give any advice to Srinivas on this one?
Yeah. Again, I do not find much comfort in the valuation. I'm just looking at the valuation. So it's a good to sell. Of course, as I said, there is a upside risk purely from the speculation and the perception point of view. So therefore, the investors should take a call on appropriate time to exit the stock.
Fair point. The last 5 days, it has seen an upside of over 5%, but in the year to date, it has lost about 8%. So the call, Srinivas, is to exit at this juncture. Ganesh Yadav is joining in, asking about RVNL. And interestingly, a lot of these stocks, Mr. Chokkalingam, in the railways or in the allied space have run up very substantially. We've had conversations about them in the recent past. But would you say, based on the potential in the space, that there is still upside potential based on the earnings trajectory that these companies have indicated?
Certainly not from the fundamental point of view, there is any upside. Only perception or speculative news can drive them up. We have seen in the last 30 years different stocks, railway stocks, how they flare up, how they crash. Just look at even before COVID, couple of years historical data which is available from the BSE site. You would be surprised to know that even intra-year they have fallen 40 to 75% also after running up phenomenally. So one should go by the valuation. Let me tell you, the total market cap is 320 lakh crore. Even if 2% comes up for sale in the market overall, you need 1 or 2 months to absorb that kind of liquidity. That is why whenever the sentiment is broken, particularly the small and mid cap fall very badly, because there is always a disproportionate relationship between the liquidity available in the very short term and the overall market cap. And support comes for the large caps from the DIIs, but it doesn't come in the same proportion for small caps, obviously for lack of valuation comfort. Now also, in case these railway stocks, different stocks, if they fall minimum 20%, then one can look at them selectively.
Okay, interesting. Mr. Chokkalingam, we've also been speaking for several years now, and I think last month was the first month since I've been tracking the data that the number of folios in small cap actively managed funds has overtaken that of large cap as well as flexi cap, and that just proves to be an indication as to how much money from the retail side is flooding into these small caps. So I completely take your point. in that the valuation comfort is certainly not there in several of these names. I will come back to you and ask you about which stocks you have identified which still have value, because you pointed out that there are a few names in the mid cap and the small cap space where you see some value. But before I do that, Rajesh, why don't I come to you on RVNL? What are the charts indicating?
We have seen a very strong run up in most of the railway stocks now. Since last couple of trading sessions, we are seeing some profit taking is happening on the higher level. If we draw a trend line on the daily chart for RVNL, stock has given a breakdown to its upsloping trend line on the daily chart. That indicates that trend is now reversing, and then we may see some more profit taking in the stock. If stocks breaks below 158 level, then this profit taking can extend towards 150, even 145 level also. That is again the important support area on the downside. Though overall structure is bullish, so we would suggest if it comes near to 150, 145 zone, then again there would be again buying opportunity in the stock in the decline, as overall long-term structure is still intact. So we will suggest to buy in the decline if you get the chance around 150, 145 zone.
Okay, I'm coming back to you, Rajesh, on a short-term query. This is from Rashida. And Rashida has bought ITI at levels of 116. The stock is currently trading at 179 or thereabouts. Asking whether they should take this opportunity to sell. What is the view on the charts?
So very strong run up in the stock in recent past, and now we have seen almost during the month itself 50% kind of gain stock has delivered. You are sitting on a very good profit in the stock, as we are seeing that market is showing some kind of profit taking in most of the mid cap small cap space. ITI has already run up, so you should now trail your stop loss at 172. If it's break 172, you can book at least 70% of your long position and book the profits if it breaks below 172. If it's hold 172 in this corrective move, then I think probably again support buying action may emerge in the stock, and then possibly some pullback action towards 190 can be there. So around 190 also you can book profit in pullback, or trail your stop loss at 172 to book 70% of your gains, whatever you are enjoying at this moment.
All right, fair point. Mr. Chokkalingam, coming back to you on a couple of large cap names, and these are at least one of them, Titan. We've had conversations with several experts over the past and questioned valuations, but it keeps going from strength to strength, right? This question is from Rahul Kumar, and he's asking about Titan as well as Chola, or rather Cholamandalam investment. Would you suggest that a fresh entry is possible even at these levels?
Certainly not. I would. We have given a sell call on Titan recently. So good to sell if you go by the valuation. Cholamandalam also, if it corrects at least 10%, then only one can look at it.
Okay, I'm very curious about the ones that you have a buy call on. But having said that, let me ask the questions first, and then when there is a lull in the questions, perhaps I can come back to you. Suresh Taneru was asking about Subex. Do you have any view on the fundamentals? He's looking at the next 2 years, Mr. Chokkalingam.
Subex. I used to track this company for last 20 years. I may go wrong. I will not recommend this stock. Just look at intangible assets as a percentage of total capital available. You just look at the balance sheet. I don't get any comfort at all. This is not the kind of stock I would recommend to the retail investors. But of course, stock may go for various other reasons, but I would not recommend such stocks.
Okay. So now that I've taken all of the questions that are lined up, and I incidentally did get a question on Twitter on State Bank of India, but I'll hold that for now. Mr. Chokkalingam, so far, you have not said that there is a buy on any of the stocks that we've mentioned, but you have mentioned that there are a few stocks that you find value in. What are those stocks? And I think that you also pointed out that in the broader markets, there is still value to be found.
Yeah, few I cannot speak on compliance reason, because last 1 month I bought what I consider as a great value stocks. I've been continuously buying. I do my SIP. So if I exclude 2-3 of them, then definitely one stock I can recommend with a lot of confidence, Indoco Remedies. I have been every time I had one high conviction pharma stocks. In the past, we were successful in JB Chemical, Unichem. after giving sell call on those, now I like Indoco Remedy. It is quite close to 52-week low. Not only that, if you look at the domestic formulation sales and export sales, and then take the EV2 sales, it's extremely attractive in terms of valuation. And second, small cap, micro cap, I would like to caution the investors. It is extremely high risk stocks just because it is a micro cap. But fundamentally, I am convinced it is micro tech. It's a small micro cap technology stock. It's owned by foreign promoters and a lot of cash on the book, 94 crore cash, which is about 28% of the current market cap. Enterprise value to annual IT revenues or PE ratio, it is very extremely attractive. Third, small cap, KCP Limited. Personally, also I am holding them. Again, it may not reward you in the short term. I believe that it is a potential multi-bagger. It might take time, even 2-3 years, but it's a great stock. If you look at the enterprise value and then compare with its cement capacity or sugar profit from Vietnam, or the land bank in Trivandrum in Chennai, or Star Hotel in Hyderabad, it's a phenomenal deep value stock. I'm not sure when it will unlock in the marketplace, but I'm confident on the basis of the balance sheet and management quality and the valuation. This is the right kind of stock for people with a medium to long term investment perspective. These are the three stocks, but I just want to tell you that if small cap, mid cap fall, even such high quality stocks may fall, but I would not really, I would use them as an opportunity to accumulate. Lastly, not a small cap, but the one stock I like most is Geo Finance. I believe that in next 4 to 5 years, this can be a multi-bagger.
I'm curious about that, that last one. The reason I'm asking, Mr. Chokkalingam, and Rajesh, I'll come back to you in just a bit, but I'm very curious about that last buy call that you've made. As much as has been spoken about Geo Financial Services, and there is a lot of potential, nothing has happened as of yet. So are you buying this from the perspective that there will be a lot of action in the next 3 years in Geo Financial Services?
Yes, we have given a buy call. We stated in our report that this is one of the high conviction stocks. The reasons are, one, coming from Reliance Group, which has already proven its ability to scale up the business in retail and Geo. In fact, even I did not visualize this kind of leadership being created in such a short span of time. And they will be able to repeat it in the financial services as well. And second, look at the smart strategy. It has taken a berth on the stock market already with about 1 lakh crore worth of Reliance shares. I don't think, it was just a coincidental one. There should be a great vision behind this strategy. And so if you include the financial net worth along with this net worth created by the investment value, the price to book value is around 1.6 times. So when you have companies like a Bajaj Finance, Poonawalla, when they trade at 3 to 8 times price to book value, why not Geo Finance trade at 3 to 4 times in the next 3 to 5 years? And they already attracted a global player in the asset management business. I'm sure they will become a threat to Zerodha. They will be a threat to many, the direct player and indirect player in financial services. So because of these reasons, I consider Geo Finance as the great long-term value play.
Okay, interesting point. Any view? I know that recently made its debut. So Rajesh, any data at all that you can use on JFS?
Yeah, so we have very limited data set up recently listed. So yeah, on the downside, 220, 210 is the good level again, to re-enter in the stocks. We've seen the strong support buying action from those level, and the stock has rallied to the level of around 250 to 60 zone. So we believe that, again in the decline, 220, 210 is likely to act as a good support area. So one can, buy and accumulate this stock. Again, the data is very limited, so I cannot comment for long-term, short to medium-term perspective. But yeah, for near-term, if you want to accumulate the stock, use this decline towards 220, 210 to buy this stock.
Okay. One last question I will take, and that is on State Bank of India. This is a question from an unnamed user on X. I will first take a technical view, and then I'll come to Mr. Chokkalingam on the fundamentals. What's the view, Rajesh, on the charts?
The whole PSU banking basket is showing good traction since last couple of a week, and State Bank is one of the stock where we are seeing strength is there since last 3 weeks. And looking at the overall structure, as stock is comfortably holding above 595 600 zone, so our view is bullish for the near term as well as for the short term perspective. Also, stock is traveling in upsloping channel on the weekly chart that clearly shows that your trend is up. So buy and accumulate is the strategy for SBI. Keep your stop loss at around 580 if you are buying for short-term investment. And on the higher side, once the stock crosses above 620, then there could be a strong rally we can see towards 660, 680 also. So our view is bullish for SBI at this moment.
Okay. Mr. Chokkalingam, State Bank of India, I look at the last 1 year gains of only about 5% or thereabouts, whereas some of its other peers, much smaller banks and not too much to speak of in terms of credit growth or anything like that. Indian Overseas Bank, for example, has gained tremendously. Some of these stocks have gained over 100%, and the PSU banking pack as a whole has gained over 50% in the last 1 year. Why do you think that SBI is getting undervalued to that extent? And should people buy into SBI right now?
Yeah, very interesting question. If you look at from Lehman days, these PSU mid-sized banks always, they rallied unbelievable extent. They gave a multi-bagger, but it is also equally true that post such rally, most of the time they fell even 40 to 60%. One thing is very clear, they don't get valuation like a private sector banks. They always get around 1.23 times, 1.3 times maximum in the bull market. In a bad market, they go down to even 0.5 times the adjusted book value. So now I would sell 9 out of 10 PSU mid-sized banks. And definitely I would suggest hold on to SBI. It may not create a big wealth from current level because that is also trading around 1.2, 1.3 times adjusted book value plus the SOTP value of subsidiaries and other joint ventures. But as I said, I am a little biased in favor of large cap stocks for time being. So to that extent, I would suggest hold on SBI, sell almost all PSU banks in a phased manner.
Okay. Speaking of banks, and this is the last question for the day, gentlemen, I will come to both of you. IDFC First Bank is the name of the counter. Arjun is asking another question. He's bought at levels of 30. He's asking if he should book. The reason he's asking, Mr. Chokkalingam, is that he is willing to hold for 3 years more, and he's willing to add more at the current price. What's the view on the fundamentals?
I don't think what phenomenal achievement it has done from 30 can be repeated, because let us not forget the fact that its equity base itself in thousands of crores. Compared to that, all these ICICI, Axis and HDFC, when they started, they had a very small equity base, and then the business also grew. The banking business grew from 7 lakh crore to 140 lakh crore. But today it is very difficult to increase the penetration of the banks, and on that equity basis, it is very difficult to create a phenomenal wealth. And secondly, economic factors also not that favorable to the banking sector. Suddenly, we saw the oil price touching $95. We saw the monsoon deficit at 9%, and then one more hike is coming from the US Fed. And in India, the inflation also still above comfort zone. And lastly, but most importantly, the banking credit growth, which used to be 16% a couple of months ago or a couple of fortnights ago, now it has come down to around 14%. The stocks also rallied. So I believe this is a good time to sell and realize a profit. And investors should, use these profits to reduce their debt or buy own house or keep fixed deposit in their family members' names. I may be wrong, but I would be conservative and I would carry on this view so strongly in the short term.
Very, very interesting suggestions there, Mr. Chokkalingam. I will still go to you, Rajesh, on the technicals. And now that Mr. Chokkalingam has suggested a sell, what are the best levels in near term that you can say that our viewer Arjun can go for?
See, if we analyze the overall structure for IDFC First Bank, that is still showing the bullishness. This is the 6th consecutive month where stock is forming higher high-low formation. That clearly suggests that sustained buying is taking place in the stock prices. Even on the longer-term chart, if we look at on the yearly chart, it's a multi-year breakout of 2016 swing high now taken out by the stock. So my advice would be keep your trailing stop loss now at around 85 rupees. That was the previous breakout level of the stock. So if at all stock has to move further higher, then it should not break below 85 level. So keep your trailing stop loss at 85. If it breaks those levels, then you can start booking some profits below 85 level, or you can hold your position with stop loss of 85. Maybe once this market selling pressure absorb at certain point, then we believe that outperformance would be there from the IDFC First Bank also, because as overall technical structure and across all time frame is showing the bullishness.
Understood. Rajesh, thank you so much for that view, and indeed for all the questions that you answered. Mr. Chokkalingam, as always, a pleasure speaking with you, both of you. Thank you so much for speaking to Ask BQ. And viewers, well, there you have it. A lot of your questions answered, and if you've got more, keep them in reserve and join us live tomorrow at 11:30, and we'll take all of them live. Thanks so much for watching. This is BQ Prime.